Good morning, everyone, and welcome to the European crossover webinar. And we did see quite the reaction post FOMC across the asset classes. You can see here we saw the euro really come down here to this 1739 area. Wasn't sure if it would make it all the way down here, but it did. And take a look at the cable real quick. We also did see stocks come off quite a bit, and we can go and take a quick look on there. And specifically right here with the NASDAQ, and boy, did we see a pretty good little sell-off from that movement. And actually when the presser came out, we didn't even see much of a rally. We'd actually had the rebound rally in the morning, and we didn't even make it back to even the rebound high when Powell had his presser. And then from there, it's just been pretty much downhill as we pretty much just rotated lower and didn't stop back. I mean, we rally up here and then we just continue to fall off into Asian trading. Obviously, we've had quite the fall here. You can see here we dipped down. We actually even went even lower than the 78%. And we've bounced back just a hair bit here. Taking a look at the economic data. So we just got Italian trade balance data that came out, but we're going to have HICP final data coming out of the Eurozone. That'll be at the top of this next hour. And then it looks like we have a slew of, well, we do have Bank of England. So, of course, that's going to be at 7 a.m. Eastern. And then as we come into the States, we'll have at 8:30 Eastern, building permits and housing starts. Obviously, the weekly jobless claims, as well as Philly Fed. So quite a bit of data coming out, all at 8:30 Eastern. And then after that, no data. So quite the slew, as I mentioned, is we get Bank of England at 7 a.m. Eastern, and then at 8:30 Eastern, building permits, housing starts, jobless claims, and Philly Fed. And looking at Philly Fed, not as much concerned with the numbers here. They just seem to move around with, we're going to get a recovery. The recovery slowed down. And I just don't see that there's that much difference. I mean, most of the time they just focus on the headline number. I'm talking about ever since the pandemic. And then we might look at the employment. That's about it. That's pretty much all that counts at this point. So we're going to move this out of the way. Take a look at the S&Ps. Pretty good sell-off here in the S&Ps, all the way down here to 3310 before a nice rally back up here at 3355. Not really quite the same amount of rally we saw here in the NASDAQ. Well, decent amount, but I'm saying is we have really seen quite the sell-off, here. With that, we'll go on and take a look at the news and just get into the analysis. Looking at the Aussie dollar, the Australian New Zealand dollars snapped 4 sessions of gains and fell on Thursday after U.S. Federal Reserve set off a wave of dollar buying, announcing no new aggressive easing measures after its overnight policy meeting. The Aussie caught a brief surge in support, surprisingly robust jobs data, but soon fell back to 4/10 lower at 72.78. The Kiwi dipped to 66.92, and the U.S. dollar was rose broadly across the board. It's just too difficult a day for the Aussie to rally, really, said Westpac Sean Callow. The market was already positioned for the Fed's dive, another wave of dollar weakness, and then there was always the risk that there was always be excessive. That overwhelmed the impulse to buy the Aussie in the wake of the data that showed a drop in the unemployment rate to 6.8%, miles above the 10% or miles below the 10%, I should say, a level that central banks have been expecting to hit by the year's end. Full response is probably going to come down the track in terms of forecasts for Q3 GDP or what the RBA might do, and the talk of a trim to the cash rate likely to subside for now, Callow says. Perhaps a hint that was evident in a bounce in the Aussie Kiwi cross to 1.087 per Australian dollar, though other crosses traded heavily with mood as speculators unwound their bets on a super dovish Fed. The Fed's meeting was the first since adopting a more tolerant approach to inflation and a vow to keep the rates near zero until the prices overshoot 2% growth for some time. Dollar bears have felt some disappointment and wanted stronger guidance at Kerry Craig. Both the Aussie and the Kiwi remain broadly steady for the week, and most traders don't expect for the weakness since the big picture of the U.S. Central Bank determined to keep rates low for the long term intact. And then on to the dollar. Dollar just hires Fed's outlook with U.S. yields. The dollar firmed against currencies on Thursday as the Federal Reserve's upbeat assessment of the economic recovery and increased tolerance to the higher inflation pushed Treasury yields higher. As its policy meeting, the Fed pledged to keep rates low until the end of 2023. The Fed also expects growth to improve for the coronavirus-induced drop they projected in June. Against six major currencies, the dollar was about one-third lower to trade at 93.49. The greenback initially fell after the Fed's announcements and weaker than expected U.S. retail sales data that swung to territory after Chair Jerome Powell's outlook. It's the same reaction that the market had when the Fed introduced a new framework last month. Longer-term yields went up after the announcement based on the higher interest rates. Analysts said there's a risk of a slowdown economic activity unless more fiscal stimulus is provided. Besides the presidential election, I think the focus will be on the U.S. fiscal support, which Powell also said is essential. Among Asian currency, the Australian dollar briefly surged on the strong jobs data. The Bank of Japan kept its monetary policy steady on Thursday and said the country's economy remains in a severe state. Market participants will focus on BOJ's Haruhiko Kuroda's remarks about how the central bank would coordinate monetary policy with the new Suga administration. Safe haven Japanese yen changed hands at 508. And elsewhere, the Chinese yuan traded at 67.75. So enough of that. Let's just go and get on to the analysis. We pretty much all know what's happened, so there really isn't, much to delve with as far as the news. And we'll move on to the euro dollar. Now, the euro fell a little bit further than I thought. I thought it was going to kind of try and hold its own for a little bit, but it did dip down to the 17.39, which is an area we had, but wasn't what I was looking for. I mean, I was looking for it to hold, which initially it kind of did in Asia, which was the 17.73, but we'll adjust that. The euro finished weaker, finding support at 17.87. Support on Thursday will be 17.73 with resistance at 18.70. Well, you can see they made this trip down here to 17.39, and that's going to be the support. Now, we had 17.35. That was our number to go for previously. And I guess we'll just go on and leave it at that number, except on the upside, we're going and reduced the ability for to trade, and that would be right there, which would be 18.33. Still remains bullish. Let's go and move into the cable. Cable rallied on Thursday, post FOMC to 130 before paring back a bit. Resistance will be 30.25 with support at 29.12. And looks like we dipped down here almost to 29 even. So we'll stay with the 29.12, although it did overshoot it a bit. And 30.25. And on to the Aussie Dollar. So the Aussie challenged the 73.50 area before finishing at the middle of the range. Resistance will be 73.31 with support at 72.56. So it looks like might have taken out that 72.56 just a little bit. So 73.31. We'll stay with that. And on to the Kiwi. Boy, this thing really came back. Upside Kiwi pushed to 67.50 before fading back a bit. Resistance will be 67.58 with support at 66.81. And on to the dollar CAD. So the dollar CAD finished the session right where it started. The prior day's low was exceeded and the pair recovered, finishing near the high of a limited range. You can see that here. Resistance on Thursday will be 32.34 with support at 31.11. So 32.34. Looks like we just got past that right there. And if you go right here with this level right there, that's 32.41. So it did get even past that, but we'll stay with that, 32.41. And support, well, they seem to be trying to hold area here. We'll go with the high there and the high coming across there, which would be 31.33. Onto the peso. So the peso slid back on Wednesday, but is attempting to defend the 21 area. Support on Thursday will be 20.93 with resistance at 21.14. Still remains bearish. So on to the dollar yen. The dollar yen tested the bias chart support at 476 with a low of 480. Resistance on Thursday will be 545 with support at 469. And on to the cash dollar index. So the dollar finished only slightly higher despite a moderate sell-off in equities. Resistance will be 93.67 with support at 92.49. So it kind of rallied a little bit better than expected. So on the downside, it's going to be these lows here, 92.77. $93.67. And on to the cross rates. And on the Kiwi yen, we did go in and blow some stops on the downside. On the Kiwi yen, we had 70.42. It's going to be this low right here, which is the opening on that bar. Looks like they went down there just to test that too, which is 69.98. And the upside is going to be right there at the closing highs right there, which is 70.83. It doesn't look that that'll be challenged today, though. And on to the euro yen. Same thing here as we saw the euro go and pair back. Support right there, which would be 23.11. And you can see here the key 24.01. We'll just put this just a hair bit above there, right there, which would be 24.21 for resistance. And on to euro odd. You can see right here they held that. So they held that low. We keep that right there, which is going to be right there, 61.20. And on the upside, I don't think they get too far up, but we'll be looking on the underside right here as resistance, which would be 62.48. Really don't see them challenging that too easily, but that'll be it. And on to the euro Kiwi. Support will come in right there on that close, right there, which would be, looks like they almost made it there, not quite, 75.02. And resistance right there at the key low, 76.36. Onto the Aussie yen. Pretty good dip here as they took out the stops. Support, we're just looking at the volume touches coming all the way across as many touches. Comes in right there, which is just below the lows, which is 76.05. with the upside right there at 77.10. That might be a stretch. We'll take the underside right there, which is 76.97. And to the guppy. It's still going to remain the same, 35.26. And the upside, let's see what we had for the upside. We had 36.73. The low right here, and that would be 36.69. And sterling odd. Pretty good snapback here. Rebound high. Actually, that comes in right there. 78.70. With support right there. That high there, which is 76.62. And that takes care of it. We were able to wrap through FX because we're really not that big moves. We're not seeing monster moves or anything like that. The euro went a little bit lower than initially what I was looking at, but once again, it wasn't a whole lot lower. It wasn't like we broke 100 pips or anything like that. So all within reason. Even have a little hammer, and that was my concern. Although I guess we could have moved it down here to 39, but my concern was that we wouldn't go very far, and then we'd really open the door for us to go higher and the dollar just to fall apart, which it looks like he's going to do anyway. As I said, whether it comes, doesn't necessarily mean it's going to come today, tomorrow, next week, but I do think the dollar's going to fall. We break those lows, we'll fall 200 ticks. Speaking of which, I think we break these lows, we'll fall 200. We're just not getting it. Look at that. We saw a pretty good sell-off, and look, we can't even take out the real true breakout high, which would be 93.89. We can't even get past that. It's silly. We should actually be knocking on the door here. We should be right here, right around 96.50. At least. So we're going lower. In time we'll be going lower. That's going to wrap it up here for that. We'll just take a quick look at the indices. Take a look and see what crude oil is doing. Good little rebound here in crude. We did get that pause yesterday, right that area we're looking at, and the market did that. Of course, we did have crude oil reports, so we were able to go and push even further. And right now we are into this is a good little resistance level right there, which they did pare back, which is 40.27 essentially. Did pull back, not bad. Pull back a little over 75 cents on that one, kind of reasserting ourselves. Take a look at the gold. Same thing, it weakened itself here. Right here with gold. Still trading in that range. Well, it hasn't been a bad pullback, but we're back here to this 1945-ish. We're at 1949, but 45-ish here for the support area. And the SPOOs, pretty good little pullback. It's a nice little snap. And the same thing here with the NASDAQ. Nice bounce back. Really was quite the overshoot. I even thought that we'd settle out at 1111. Then even 1087, 11,087 was pretty much on the 30-minute was a really good area here. And we even went past that. Even took out the 78% before we came out here, and then we're able to see some buying come in. Hasn't been huge buying, but we've kind of allowed this market to come back up here. Key level above here is going to be right there for now. It's be coming in around 11,159, basically 11,160. So probably about 150 to go before we see some good, a little bit of resistance. This will be a pivot right there, which will be 11,187. But that'll do it here, and we'll get the buy chart posted, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.